In a major development, the benchmark stock market indicates plunged sharply on Monday, imitating the global market as uncertainty over Donald Trump's tariff fueled the bloodbath. The CNP BSE Sensex crashed 2,564.74 points to 72,799.95, while the NSE Nifty 50 tanked 83.95 points to 22,072.50 as of the afternoon. While Monday's stock market crash, the Sensex and Nifty has plunged to the lowest levels in approximately 10 months, and analysts suggest that they could fall further due to massive volatility in global markets. The crash was so severe that it wiped out Rs 19 lakh crore from the combined market capitalization of BSE-listed firms. Finance expert believes that globally markets are going through heightened volatility caused by extreme uncertainty. No one has a clue about how this turbulence caused by Trump tariff will evolve. Wait and watch would be the best strategy in this turbulence phase of the market. All 13 major sectoral indices were trading in the red. Broader markets indicates also suffered steep losses. The small cap index dropped 10% and mid caps declined by 7.3%. In Monday's trading session, the domestic stock market witnessed carnage. There was not a single gainer in sight across this BSE Sensex. The market crash was particularly severe for Tata Steel, which plummeted to 11.25%, marking the steepest decline among all stocks. Tata Motors followed with a sharp drop of 8.24%, while Tata Mahindra tumbled 6.70%. Infosys and HCL Tech rounded off the top 5 losers, both sliding 6%. The market sell-off was widespread and relentless, with even traditionally defensive sector offering no refuge for investors. Heavy selling pressure was evident across the segments, with banking, technology and automobile stock bearing the brunt of the negative sentiment. The comprehensive red screen signals significant investor anxiety, potentially triggered by broader macroeconomics concern or specific sectoral headwinds. Trump is unlikely to impose tariff on pharmaceutical since he's on the back foot now, and therefore this segment is likely to show resilience. The slump on Dalal Street mirrored the heavy losses seen on Wall Street and across key Asian markets, with the MCCI Asia ex-Japan index falling 6.8%, Japan's Nikkei 225 trembling 6.5%. The sharp global market sell-off came after US Federal Reserve Chair Jerome Powell said on Friday that newly announced tariffs by former President Donald Trump were larger than expected and could significantly affect inflation and economic growth, casting doubt over the US outlook. The Nasdaq officially entered bear markets territory on Friday as commodity prices, including oil, fell sharply in response to Trump's sweeping tariff announcement made earlier this week. Apparently, experts suggest that there are a few things that investors should keep in mind. 1. The irrational Trump tariff will not continue for long. 2. India is relatively better placed since India's export to the US as percent to GDP is only around 2%, and therefore the impact on India's growth will not be significant. Third, India is negotiating a bilateral trade agreement with the US, and this is likely to be successful, resulting in lower tariffs for India. But the current situation continues to persist.